You that when the NASDAQ peaked on July 10th, that the S&P started setting up that divergence, and again, it ended up going and getting a higher high. NASDAQ got a lower high, and we started seeing the selling pressure. S&P formed that divergence with momentum, and on other indicators, we saw it on the RSI and other indicators. It's been validated. We've gone negative. We see we saw the momentum line flip, trend signals flip, and those signals that I warned were warning of a turn. They played out. Immediately confirmed. Again, in this video I'm talking about, do we just keep going all the way back to 4,900? Do we just keep going, or do we get a rebound first and maybe move to a new high and try to fill the gap? Or do we have to go lower and then get it? It can play out either way, but if we see momentum start to turn back up, we can try to go higher. But momentum right now and the trend, they're both bearish. If we attempt a recovery or not, guarantee we fill those gaps. I hope you hear what I'm saying. There's no guarantee we do it. But if we do attempt a recovery, then again, we could form a triple negative divergence on indicators. We could form a triple negative divergence with momentum, money flow with the RSI, stochastics, things like that. And NASDAQ, I warned you about these signals back up at the top before the sell-off, and again we had that rally back up, and I told you we'd likely get a lower high at the Fibonacci tracement of the decline after the CPI sell-off. We did, and this followed. Again, it may not be done yet. Watching to see the 100 period is directly below. Do we try to bounce off of it? Signals played out beautifully. Shaded area is telling us, hey, we might get a bigger sell-off. We had it over here. We had this big move higher. Here and here, we had it right here, and we had the move lower. So again, will the institutions stop selling and let the retail investors buy it back up to fill the gaps? They just keep selling and pushing it down hard into earnings season, all the way back to 17,000 here, and to form our head and shoulders pattern. We'll see if we fill those gaps or not. No guarantee we fill the gaps. Saying it, I hope you hear what I'm saying. Good, but the opportunity here was back up here. If the signals start turning back to bullish, then again, some could flip back up. Maybe playing catch up to Bitcoin if the institutions just continue to sell. Feeble rebounds. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, if you like the indicators, please let me know that by supporting the channel. Follow the link below to take you to a secured site. You can donate any amount you want. Take a moment to do that. I would really appreciate it. Just put everything out there for free and just ask that you do what you can to help out so I don't have to have sponsors. Contact me all the time. I turn it all down because I don't want to make merchandise of you and send you to people's website to buy stuff you don't need. Send you to websites where they want to overcharge you for things. I don't want any part of that. So I just ask that you just help out and do what you can. But I do need to hear from you in order to make it work. Please consider helping out today. It'd be very encouraging to hear from you. Just follow the link below and you can donate any amount you want or make it a recurring donation. If you do that, I thank you very much. Just quickly, again, watching the gap now down here, watching the gap that we just now filled to see if, again, that gives us a tradable bottom or not, or if we keep going, watching the gap up here on NASDAQ daily. Do we start moving towards this gap up here at 20,000, or do we keep going down and move towards the gap here at the 18,650 range? And then we have this gap from today. Be watching that. Short-term momentum with price fluctuations, still bearish. This just looks like very, very short-term momentum. Watching to see if that shifts. I told you yesterday the market was going lower. The NASDAQ, it just had its worst day of the year. The worst day that we've had, actually, is 2022. Again, the institutions are selling into the rally. The retail investors are buying. We went up on lighter volume. We'll talk about the NASDAQ, and again, probably decision is about to be made, whether we're going to get a hard push down back to 17,000 or whether we're going to rebound back up towards 20,000. That decision is going to be made by the institutions, whether they come back in. Wait, I'll show you the charts. Pretty fascinating stuff. The Dow was down over 1%. The S&P was down over 2%. NASDAQ was down over 3%. So it was down over 2%. But 1, 2, 3. How about that, huh? Might want to watch the video all the way through. Really important charts to share with you on the NASDAQ and S&P 500. The Dow down 1.25%, down 500 points. S&P down 128 points, down 2.31%. Close at 54.27. The NASDAQ's down 3.64%. Russell down 2%. The VIX was down, or the VIX was, I'm sorry, up to just above 18. The VIX was up 22.5%. And you know what that means. And if you don't, I'm about to tell you. Now, first of all, we had this divergence between, or this discrepancy. The VIX did not move to a new low. The S&P moved to a new high. That was a huge warning sign. The VIX is telling us something. The VIX, again, continues to be above the 200 period, the black line right here. It continues to be above the 50. Again, I talked about it when it happened. We had complete complacency. I told you the institutions were selling into the rally. We were told there's no possible way the market goes down because the Fed is about to pivot. Market's now going to really go. The market's in a topping process. And the experts on the financial channels telling us we're going to have this bull market and this soft landing bull market to 2027 over social media. Oh no, we're just starting the bull market. Now it's really going to go. The financial institute, the people on the financial channels, if we're in this new bull market, why are they selling into the rally? This is distribution we're seeing. They're feeding the propaganda and the Kool-Aid to the retail investors, Kool-Aid drinkers. Oh no, we're going to have this soft landing out of the Fed. And that the Fed pivot, that's extremely bullish. It's not. I've shown you the charts. It's extremely bearish. And before you get that Fed pivot, you're likely going to have a stock market top. What's probably happening? NASDAQ's probably already peaked. S&P probably will go up, make one more high, attempt to fill that gap. No guarantee we do. But a decision's about to be made. We're going to keep going down and get a very, very ugly sell-off right here and now, or whether we're going to find a tradable bottom and go back up and fill these gaps. The decision is going to be made by the institutions. The money to do it. The retail investors don't have the money to do it. They can make it go up on lighter volume if the which could be if the institutions back off and stop selling. The retail investor by the dip crowd can come back in and we can take it higher back up to try to fill these gaps. We'll be watching an important decision is about to be made. Whether we keep going lower or whether we find a tradable bottom. The VIX was up again 20, what was that? What did I say? 23, 22.5%. If it's up more than 10%, 85% chance in the next two sessions you have a bottom. Now, I mean short-term bottom, not the bottom and it's over and it's done, but a short-term bottom or a bounce. Counter trend. That's what that means. 85% chance. But because it's more, that's just if it's over 10%. Here we are, we're up 22.5%. That means in the next two trading sessions, there is a 95% chance in the next two sessions, Thursday, Friday, maybe with the PCE data, one or the other, that we have a bottom or a bounce. Term bottom or a bounce. If the S&P does try to bottom, there's still a pretty good chance it's going to go try to fill this gap back up at the top. The NASDAQ, if we form a tradable bottom, and it does look like the S&P is getting possibly a 3-leg push down, NASDAQ's getting a 5-leg push down. Rebound on NASDAQ, again, I'd be looking for that gap to fill at 20,400, establish a possible lower high with an ABC move back up. Now, listen to me. Are you listening? There's still a 5% chance that it's going to fail. When does that fail? Listen to me. We may go lower before this plays out. It's the next two trading sessions, Thursday or Friday. Maybe Thursday we keep going down. So is with the divergences that we're going to try to bottom out. Maybe we gap lower at the open or try to gap higher at the open. Try to get a tradable bottom with the divergences. Possible we are trying to bottom right now with today's sell-off or tomorrow that we see a bottom if we go a little bit lower. That is very, very possible. Not guaranteed. Did you hear what I said? It's still possible that we continue to go lower. Institutions back off their selling. The buy the dip crowd can come back in and drive it back up. Can help it as well and drive it back up. Now, when this does not work is when you start going parabolic, which we could be doing. Did you hear what I said? Great Scott, did you hear what I just said? If this starts going parabolic, okay, that's when the signals tend to fail. The VIX signals, again, 95% of the time when you get a move above 20% within the next 2 days, you get a bounce, an up day, or you get a bottom established. When you start going parabolic on the VIX, you throw it all out the window because it doesn't work anymore. You know, you get the pandemic going on, start seeing the market move into a free fall. That's when it doesn't work. You get a Lehman moment back in 2008. That's when it doesn't work. So I'm telling you, there's a 95% chance that Thursday or Friday we have an up day. Now, we could go lower. Great Scott again. Did you hear what I said? We can go lower before that bounce or bottom happens. Do keep that in mind. I'm just telling you that based on probability with the VIX, based on the closes, historical data, you've got a 95% chance that we form a bottom or get a bounce in the next 2 trading sessions. 2 important pieces of economic data Thursday and Friday. Before the market opens, on Thursday, we're going to get the GDP. The GDP for the second quarter, the first estimate. It's supposed to come in at 2.1%, previously at 1.4%. Again, let me say this. At some point, we're going to see a negative number with the GDP because the economy is slowing. Listen to Powell's Q&A the other day. He's concerned because the economy is starting to see evidence of the economy slowing. Before the recession hits, we'll likely see a quarter or 2 of negative GDP, negative quarters of GDP, consecutive quarters, back to back, usually, or it used to be before they changed the definition, used to be the definition of a recession. Even if this number comes in positive, there are revisions, and then later it can be revised down. Now, if it comes in weak, that's concerning, moving towards recession, but the market, again, still may try to rally on a weaker number. Oh, this gives the Fed the excuse to cut rates. And again, all this hogwash about, oh, wait a minute, the market's having the rally on the pause. It's going to sell off sharply and top on the pivot, which is likely what is happening right now with NVIDIA and the NASDAQ in a topping process, and the S&P. S&P still may go to a new high because of the gap. We're going to get the GDP. Watch to see if we get a negative quarter at some point in the future. If this number comes in weaker and eventually is revised down, we'll be watching the next few quarters of GDP because that means recession is right around the corner when you start seeing that. We're going to get the PCE inflation data, which Fed's favorite gauge of inflation. Year-over-year number is supposed to be at 2.5, lower than 2.6 on Friday. The core year-over-year is supposed to come in at the same level, 2.6, previous reading on a year-over-year basis. And then we'll get the personal spending, we'll get the personal income, and some other goodies there. Those are the 2 things, the GDP and the PCE data. You want to be watching. Both of them will be reported before the market opens, an hour before the market opens, each of those days on Thursday, the 25th, and Friday, the 26th. Next week, we'll get the Fed meeting. Again, yesterday after the bell, we got Tesla, we got Alphabet. Alphabet beat earnings, but their ad revenue was down, so they ended up selling off on that. So did Tesla. The worst day since 2022. That weighed on the NASDAQ. Again, NASDAQ getting just whacked, dropping right around 3.75%. The Tesla price ended up dropping 12.33% here. The trading session down a little bit, and after hours about 0.1%. Alphabet not as bad. Alphabet ended up dropping 5%, up about 0.33% in after hours, but again, dragging down the NASDAQ. And we continue to see these big drops on the NASDAQ, as I've been talking about. Warning, since we peaked on July 10th. We keep getting these dramatic drops on the NASDAQ after we peaked on July 10th, right there, off with the CPI data, okay? Started getting these big drops. I told you right then, we went back, we were going to likely get a rally back up into the golden pocket, probably to the 78.6 Fibonacci. We went back up, hit it on the nose, and I told you it was going to be followed by a big drop. That played out exactly said it would. The question now is there's going to be a decision made. Are they going to allow it to come back up here and fill the gap up here? The institutions, are they going to allow it, or are they going to continue? Are we just going to get a rebound maybe to fill this gap, or just a bounce, and we're going to just continue on down to the low down here at 17,000? Which is it going to be? That is the $64,000 question, because you have the ability that if we just keep going or get a feeble bounce and then just kind of keep going but don't fill this gap, again, you can make your way all the way down here to the 17,000 area. You've got a possible head and shoulders pattern in play. It could still be in play if they allow it to go back up and we fill the gap surrounding going into the Fed and earnings here. We come back up, we fill this gap at 20,400 rounding up. We fill it, and then we get the collapse, and we get something like that. So it could play out that way if they allow for a tradable bottom, a short-term bottom, to form here. Listen to me carefully. There is no guarantee that we go back up and fill that gap. Did you hear what I just said? There's no guarantee. The signals remain bearish. We just filled a gap today, and again, that was a gap and go. You may just have a gap and go right here where you just gap down. You just gap down and you just keep going. Here we got another gap. You always want to watch a gap when you get it. Is it a gap and fill, a gap and go, or is it a gap and trap? Could it be a gap and trap right here and we go back up and fill those gaps? Maybe. On an intraday basis that fills them here in the daily time frame. No guarantee. We gapped right here. It was a gap and go. We just kept going, gap and go. All I'm trying to tell you is that, again, the signals remain bearish. There's no guarantee that we get a rally, but we very well could. Intraday charts are trying to form some divergences. Now, those intraday charts, they could just give us a short-term bounce. The daily and the weekly divergences give us the turns. Now, still go up, larger divergence on the S&P 500. Here on NASDAQ, there was no bullish divergence right here at this low. Sometimes you get it, sometimes you don't. Nevertheless, I digress. Getting these big moves. Fine, S&P broke the trend line on the rising wedge in the daily time frame. It's now breaking the channel line here, connecting these lows back over here. So again, you're doing some technical damage. See if we attempt to recover or not, or just keep going. But you are breaking the trend lines on 60-minute charts with S&P and the NASDAQ. NASDAQ already did it. S&P is now doing it. But as we're doing it, we're becoming oversold. We'll be watching to see what happens. We're now coming back to this horizontal support level. We've moved just beyond it. Another gap filled directly below, breaking the trend line here. Being just beyond this horizontal support level. Let me show you that close. The RSI, I told you to be watching to see if a divergence develops. RSI is moving to a new low, so we might end up, again, having an extreme that marks a bottom, or you might end up forming a divergence that marks a bottom. So we'll be watching if we get a bounce. I mean, we had straight selling throughout the session, just nothing but selling. Remain bearish. Our diversions play out on the S&P daily chart. I warned you at that time. Again, we had advanced on lighter volume, gapped lower, and then we broke the trend line here. Of the lower boundary of the rising wedge, and again took out the 10 and 20 period, tried to bounce, got rejection at the 10, and now we're at the 50 period. NASDAQ's below it. They let it bottom here or a little bit lower, still try to go back up and diverge between S&P and NASDAQ at a larger divergence like we did in 2022, and S&P can still come back up here or go lower on the RSI and come back up here and still end up forming a larger divergence surrounding the Fed or earnings or whatever the case may be, whatever the catalyst is, the institutions allow that to happen. They are selling right now. They just keep selling, as I've said. A decision is going to be made surrounding the 50 period in the cloud here. NASDAQ's taken it out, and the gap, again, these gaps do go lower on S&P. Again, do we keep going and we start... Sorry about that, got a frog in my throat here. Do we keep going and come down to this horizontal support level here at the 4,900 area? And again, you've got your head and shoulders. And I told you that very well could be the case if we don't fill the gaps and we just continue to sell off. But if we are forming a topping process, we might try to fill these gaps. The institutions might stop selling. The retail investors buy the dip, come in, thinking they're getting the bargain of the lifetime, going back up here when they're likely buying in a topping process. Again, we gapped right here, so it's a good chance we still fill that gap on the S&P if the institutions just stop selling here. Again, my signals remain bearish. We'd have to see the institutions stop selling to get a bottom here or at a little bit lower levels. We'll be watching. Listen to me carefully. I don't know which way it's going to play out. I don't know if they're just going to keep putting pressure and, sell, and that's it. We don't fill these gaps, or if they're going to allow them to be filled. Yes, is they're going to allow them to be filled, but again, my signals remain bearish. They got to, we got to see momentum turn back up, and we got to see some of these intraday charts begin to turn bullish and give us a big rally back up. One thing I want to point out to you is the Pring parameter is forming today with the sell-off. It rolled over. It rolled over below the signal line. Pring parameter has formed a massive negative divergence, very similar to what we have on the MACD, the weekly chart of the S&P 500. Now, the S&P is hitting a trend line. If we go further back, which I'll show it to you in a moment, we may try to bounce surrounding that trend line, but you're getting this crossover. So again, this is warning, hey, now risk of a top with this massive divergence is forming on Pring parameter here in the daily time frame. Very similar to the divergence on the MACD in the weekly time frame. Here, look at the divergences that are playing out in the weekly time frame. If we try to bounce surrounding this trend line here before the weekends or get a solid break by the end of the week, we'll see what happens. Now we're slightly breaching the trend line. Again, talked about the divergences. MACD down here. MACD is getting a bearish cross this week. It may be it gets a bearish cross and we still attempt recovery back up. That's what happened over here. We got a bearish cross and we attempted recovery back up. Verged with the NASDAQ, could no longer make a new high. And we may see the same thing happen again here, but you've got this divergence going on. We'll see if we get a rebound before the weekends, and maybe it's prevented from getting a crossover, and that happens at a later date. But right now, you've got this divergence. I talked about the red bar and the awesome oscillator that before the selling really began for this week, talked about that red awesome oscillator bar in the weekly time frame, warning that we were going to get a sell-off. It played out. Again, I'll be watching the trend line here. Do we get a solid break below it here, or and it moves slightly on me? But do we get a solid break below this level? We're below it right now, just a little bit. The trend line moves on this program sometimes. We're below it just a little bit. Do we end up closing back above it? We'll be watching. Sometimes trend lines change as well. Could be though that if S&P goes a little bit lower and redefines the trend line, or bounces off of it, we still may get a divergence right here in the most recent price action on the RSI. We scaling. We have a really nice looking rising wedge here again, coming down to the trend line here from our previous lows over here and here. If we go a little bit lower, you'll hit the 20-week. You may try to bounce surrounding that 20-week if we do go lower and try to fill that other gap around the 18,600 area that I talked about. And if we do, I'll be watching, do we get a lower high? Over here, NASDAQ peaked before the S&P in 2021. It came back and it formed a lower high. It bounced off the 20-week moving average, which is where we're about to hit just a little bit lower here. And it formed a lower high, but it went back up and it got that lower high. S&P moved to a higher high. We could see the same thing happen right here as they often diverge. Now, if we plow on through this level, it could be that we end up back testing and get our right shoulder and the head shoulder formation forms, and we don't fill those gaps. We don't have to fill the gaps. We very well could if the institutions stop selling and let the retail investors come in and start hearing on the financial channels, oh, what they said over here when we started getting the sell-off on the NASDAQ, when we started getting this big sell-off right here, oh, prices look really attractive here. That's what all the experts that said it wasn't going to happen, they started saying. We started going lower and they started saying, it's done, it's over, and we just kept seeing the selling. This is likely going to produce a reversal rather than just a pullback. We could still go back up and fill that gap if we try to bounce here. You break this level, all bets are off. S&P's at a trend line, NASDAQ's just above it. We'll see what happens here. Yesterday we had head and shoulder patterns on the 5-minute charts with NASDAQ and S&P. Saw that play out. We dropped below the 200, gapping lower. We saw futures sell off overnight, and we saw this happen. Now you've got possible divergences that are forming. May not be done, though. There on the MACD, we'll see. But again, you can see the divergences developing here in the 5-minute time frame on the NASDAQ. The S&P, again, I warned you about the head and shoulder patterns on the 5-minute chart. And again, beautiful. S&P actually broke down. NASDAQ didn't until open when it gapped lower. S&P did, and again, S&P gapped below that 200 period. I told you to be watching for that, a drop below the 200 period for today's session because of those head and shoulders. Now you've got these divergences that are developing. It was a bearish divergence that gave us the peak right here. It was a bullish divergence with our bullish falling wedge over here that I told you about. Again, that was a bounce. We gapped higher. I told you that gap was likely going to get filled. Then we could resume the selling. Watching to see with NASDAQ down to gap and move beyond the 50-period moving average in the daily, it did. So you got these divergences. They may not be done, or again, they may just, listen to me. This is the 5 and 15-minute time frames, okay? They just give you short-term moves. Other times they give you reversals. Talking about these really short-term time frames. So again, it may just be a bounce and then the selling may resume. We don't know in this short of a time frame. You want to see major turns in the market. You want to look at the weekly chart and the daily chart and the monthly chart, longer-term time frames. Sometimes a 60-minute chart. Just looking divergences. Here's a NASDAQ 15-minute chart, NASDAQ 100. Nice-looking divergences developing here. Again, could just give us a bounce, could start a reversal. We'll see what happens. May not be done yet. It still may be that they're under construction here and not quite finished. We'll see what happens if we go a little bit lower tomorrow. We'll see what futures does. GDP data tomorrow. But the 15-minute charts, again, these nice-looking divergences. We had a divergence develop and right in here, and it wasn't quite done, and we went a little bit lower, and we ended up drifting a little lower before we get that rebound back up. You have two major gaps on NASDAQ. You got the one from today and you got the one back over here July 17th. Okay? It's a lower high that's set up after we had peaked on July 10th. Again, I was predicting that we would go back up and hit that 78.6 Fibonacci. Now, here is the 60-minute chart up close. I told you, again, back over here, when this diversion's formed, we had this sell-off. We dropped 500 points. We had a recovery. I told you we were going to recover, likely to the golden pocket, to the 78.6 Fibonacci. We went up. We hit it right on the nose there at 20,578, and we sold off and eventually got the gap down and broke the trend line there on the daily chart of the rising wedge. The lower boundary. Again, this is what we were calling for. Either at that time, on July 11th, there's a very good chance that NASDAQ has peaked because we already had the peak in on NVIDIA. NASDAQ moved to a new high. NVIDIA did not. It peaked in June. NASDAQ and the semiconductors peaked on this rally in July. NASDAQ on July 10th. I want you to be watching the 200, this horizontal support, and the gap fill down here. The gap fill at 19,210. We moved beyond that today. I told you to be watching to see if we would. We gapped down, and just every single hour, sell, 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 sell. We had a straight 6.5-hour session of just nothing but selling. So we'll see if we attempt a recovery. You've become very oversold. You got a possible Class B divergence here where you've got really almost these two equal lows. Could form a divergence right here in the more recent price action if we rebound back up and get something like that. Could be if we have a 5-leg push lower. I don't know. Elliott wave is speculation. Could be done. Could be we get a bounce and then we go lower and then we try to rebound back up. We could bottom out tomorrow and then try to rally up with the PCE data and going into the Fed meeting. The Fed, we could rally back up and get a topping process with the Fed. The Fed meetings call tops, bottoms, and continuations of the trend. Could we be selling off so we could rally with the Fed but then get a bigger summer sell-off going into September, where I believe the Fed is going to cut rates for the first time on September 18th. But as we're turning down and filling the gap down here and moving beyond the 50 period, moving towards the 100 period moving average, which we may bounce off of, we're becoming oversold. So again, we'll be watching to see if we form a tradable bottom here today or tomorrow or before the weekends. We'll be looking to see if we attempt to rebound. The VIX is predicting that by Friday we're going to have an up day. Either be a bounce or will be a short-term bottom. This could be wrong. It's going parabolic, as I've said. So that's the $64,000 question. Are they going to allow it to go back up now? Now, again, look at this carefully. Look at this carefully. We're hitting the lower Bollinger Band. If you can get back above it, back above the 50, then maybe you claw your way back up towards the moving averages or these gap fills and you try to fill it. No guarantee we do that. Maybe with momentum, we have to go deeper, maybe towards the 100 period moving average. You got another gap down here by that before we get a tradable bottom. But it could be that if we do drop further or try to bounce and then drop further, again, that maybe we establish a short-term bottom that eventually takes us back up to the gap up here at the 20,400 area. The gap down here is in high 18,000 area. Here we are now at the low 19,000 area. We closed at 19,032. So if we continue down or try to bounce and go lower, maybe get like a doji or something like that, or a spinning top or whatever. If we go down to that 100 period, again, we may fill this gap right in here at this 18,600, 650 range or so, somewhere in there, and that is right where 100 period moving average is coming in at. Now, again, the decision is going to be made by the institutions. Are they going to, maybe we get a bounce and that's it, and we don't go back up here and fill these gaps at all, and we just get a feeble bounce and then we go down further, down to this level. That very well could be. The decision is going to be made whether they're going to let it go back up, whether they're going to, and if they're going to let it go back up, they got to quit selling. They're selling. The question is, are we going to get something like this, or go a little bit lower and something like this, go back up, fill the gap, and then get the dump and get something like that? That's kind of something very similar that happened at the 2022 top, where NASDAQ peaked in 2021. It went back up, tested the high, just went right underneath it. S&P moved to a higher high and got a very large divergence between the two of them, multiple month negative diversions. We could say that we already had a divergence at the peak. S&P moved higher. NASDAQ made a lower high. We already had a divergence up there. I talked about that at the time. Could be we see a larger one developing if S&P ends up rebounding to a new high. Listen again, no guarantee, as long as the signals remain bearish, no guarantee that we go back up and fill these gaps. They may not get filled at a later date. But just keep that in mind. Now, again, oftentimes gaps will attempt to get filled, but our topping, that very well could be the case. If we've topped and we're not going to go higher, maybe we do it right here, right now. I think there's a strong possibility that is the case, but it might be we have to go lower before we get a rebound back up. We'll be watching this wide range bar or push below the 50 period moving average. 10 is now crossed below the 20 here on the NASDAQ. So if we just get a bounce with the divergences on the intraday charts, we'll be watching to see if this gap on the 100 is tested, or if we try to form a tradable bottom. Their divergences have formed today. We'll see which way it plays out. Those short-term time frames, they just sometimes give you short-term price fluctuations. Times they amount to reversals, times they don't. So do keep that in mind. If we just get a short-term rebound on the NASDAQ, again, we've broken this trend line right here. We've broken the rising trend line with the wedge on the daily. Again, if we get just a move back to try to fill this gap, you just may back test and not fill this other gap. That is also possible. Whoops, sorry about that. If our head and shoulders pattern ends up playing out here, this small little miniature head and shoulders, I talked about it being possibly lopsided if we attempted a rebound off of this horizontal support, but I told you, again, it was likely we were going to get another leg down and go back and try to fill this gap. We'll see what happens here. If we don't if we just get a feeble rebound or can't get the traction back up, then again, then you have the gap over here. We are getting oversold. Momentum is moved back to extremes. We'll be watching to see what happens. 60-minute chart here.